Good morning, traders and investors. It is Thursday, July 10th. Taking a look at the charts. Equities are trading slightly mixed. We've got the Dow and the S&P 500 slightly negative, the Russell and the NASDAQ positive. Overall, the market is consolidating. We're really looking at it. It's had a series of rallies and pauses. It's had a very nice rally and a breakout to new all-time highs, the S&P 500. And now we're kind of flagging sideways in this tight pattern. It's primed and ready to potentially pop and squeeze and have another run to the upside, which would be ideal. Now, the market has been flipping and flopping more or less from kind of oversold territories where we have kind of panic selling in the market, like down over here where we get oversold, or we have panic selling, little tiny dips in the market, which are in an uptrend. Those are opportunities. That's where people usually get out, shake out, and then we see the market follow suit and continue the underlying trend, which is up. So we keep flipping between kind of panic selling, and then the next day it's FOMO and people kind of buying in. And we've had these little bouts. The key here is when the bars are green, we want to just focus on the green indicator. And when the green indicator spikes and the bars are green, that means the trend is up and it's oversold, and there's people dumping shares who are kind of hypersensitive to news. And it's usually the market is going to pop and rally after that. So we had that just really 2 sessions ago. We'll see if this trend continues, is primed and ready on the daily chart for another leg to the upside. Now, if we take a look at yesterday, we saw bonds actually have a pretty nice move to the upside. They bounced about 1% and change. It's really volatile. We had obviously kind of a waterfall sell-off, really picked up speed to the downside, had a big gap down 2 sessions ago and rallied back, which is a short-term exhaustion bottom, and now is rallying back and having another big bounce yesterday. And today it's flat, but overall, definitely it's dipped into this oversold territory, this lime green, and it's having a knee-jerk reaction bounce. Again, the overall trend is still down. Not a whole lot in the grand scheme of things has changed from yesterday's analysis. I think we talked about how the energy space here has this pattern that we've talked about, how the market tends to move higher and then eventually it flatlines, and then it has this breakdown and has a series of saw blades more or less to the downside. We talked about that. It's in the book Technical Trading Mastery. This is more or less the definition of an uptrend. It explains how to identify this stuff. You can have double tops, triple tops, single tops, quadruple tops. The market is unique. It can do whatever it wants, but the general thing is to know if it's a rising trend or a trendless market or a falling trend. And that's what we have in the energy space, which we'll be eventually looking for this to break down with the stock market and sell off. And this is a reaction high, so this is back up into resistance. And just taking a look at crude oil, if we look at crude, it does have a bearish price action. Obviously, the trend is down, series of lower highs, lower lows, and the short-term pattern. We have a drop and we have a bear flag. So oil might continue to want to work itself up, but overall it is in a kind of a bearish bias. And a lot of times we see gold and commodities and oil kind of do this bearish move, and then it can find a little bit of it kind of hooks up. We can see that over here. We have a move down, and then it creates this bear flag, and then it kind of picks up speed and hooks up, and then it dumps out. So I wouldn't be surprised if that happens. And these hooks, these kind of pops at the end, is usually what sucks in gets people offside. So those who are betting on falling prices because it's a bearish price action, the trend is down, these hooks happen so quick and so violently in the wrong direction against the masses that they cover their shorts, and then it fuels this big pop, and sometimes it can last several days, and then of course it drops once the shorts are out. So I wouldn't be surprised if we see something like that. And if this does hook up, then we'll probably see energy stocks have that pattern and potentially move higher. Now, we did see a big move up in energy stocks already 2 sessions ago, and typically if energy stocks lead, well, they can lead oil, just like mining stocks and can lead gold. So this is kind of a sign telling us that oil might hook up and move a little bit higher, and energy stocks might continue to move a bit higher before rolling over. Other than that, that is really about it. There's not a whole lot that has changed in the markets. Let's just take a quick look over at gold. Slightly higher today, but in the grand scheme of things, it's right through the middle of its range.